Okay, looks like people are joining. So if you all are ready, we'll go ahead and get started.
Ready as I'll ever be.
Okay, great. Well, first of all, I wanted to say thank you for our participants today for joining us. Thank you for everyone who is either registered and on the call now or will be joining us at a later date to view this after we are done as a recording. But I thought I would just quickly introduce myself. My name is Lori Donaldson. I am the CEO of Current Marketing Solutions. With me today are my business partner, James Hansen, and our guest, Diana Marsh, Chief Customer Officer at Data Intelligence Group, or DIG, as we like to call it. So welcome. We're very excited to have you both today, joining us for a conversation that gets to the heart of what drives smarter growth for community banks and credit unions, which is your customers' data or your members' data. So today's webinar is titled Unlocking Effective Marketing with Your Data, and it's part of our ongoing series focused on creating a smarter path to banking growth. So the financial landscape is shifting fast with interest rate volatility, uncertain regulation, rising digital expectations. Many institutions are struggling to grow deposits and deepen their customer relationships. But there is good news. The solution is already inside of your organization. By integrating predictive data modeling into your ongoing marketing strategy, you can have more efficiently acquire new households and expand your share of wallet, all without adding pressure to your internal team. These things are possible today, and we're going to get into them. So first, we're going to explore how our T3 approach works hand in hand with smart data practices to drive measurable results, while we asked Diana to join us today. So as we go through the webinar, if you feel free to drop your questions into the chat, and we'll try to seamlessly integrate them in the conversation as we go, and allow for plenty of time for questions and answers. So just a quick introduction to our panelists. James Hansen is the Chief Operations Officer and Partner at Current Marketing Solutions. With over 2 decades serving in or alongside financial institutions, James is the Chief Architect of Current's T3 initiative, which leverages that experience. In the last 20 years, James has helped community banks and credit unions acquire over $2 billion, and that's $2 billion in consumer deposits. So thanks for being with us today, James.
Thanks for having me.
We're also excited to welcome another panelist to today's conversation. Diana Marsh is the Chief Customer Officer with Data Intelligence Group. For nearly 2 decades, DIG has provided customer data management solutions focused on results, starting in client services that provided direct marketing solutions for banks of all sizes. For the last 7 years, Diana has worked to provide innovative data solutions to DIG's client base that includes Fortune 50 companies. Thanks for joining us today, Diana.
Thank you for having me.
So for our discussion today, we're going to focus on the importance of managing and leveraging data specifically for community banks and credit unions. It feels like we can't get into the details, though, without acknowledging the broader macroeconomics and banking and today's economic climate. James, there's a lot of noise in the industry right now about economic instability, what's going on with regulation, whether that's the FDIC or the future of the CFPB. How is all of this uncertainty impacting how community banks and credit unions approach growth?
Well, thanks for having me, Lori, and thanks for a great question. I think it's important to acknowledge that there's, I guess you would call it volatility or uncertainty, simply because of the way things are changing and the speed at which they're changing. The things that impact the financial services industry, particularly in the community banking and credit union space. There are rate fluctuations or intended rate changes that may certainly impact general profitability. And there's also kind of a sense that the rules might be shifting a little bit. The CFPB has been downgraded at a minimum, I would say. Which means some of the oversight that typically was there to protect consumers in the past may be loosening. And I know a lot of, especially in the community bank space, there was a feeling that some of that kind of burdened them with some, what they considered intrusive regulation. So having that loosen a little bit, I think, can dramatically change how they approach customers and retain them. And additionally, the fluctuation of interest rates is just another indicator that you really have to focus on full household acquisition and acquiring both sides of the balance sheet from households and making sure that that rate uncertainty is balanced out by the longevity of relationships that you have with consumers and the depth of those relationships.
So consumers obviously have a lot of choices, and there's clearly a lot of competition in the market. And with interest rates fluctuating and deposit competition heating up, what should institutions be thinking about when it comes to that household acquisition, like you mentioned earlier?
Yeah, I think, and this is where the leveraging your internal data really becomes important. And it's taking the time to understand who your most profitable account holders are, who your most profitable households are, and figuring out what is it that really drives the profit levers from a product and balance perspective. And then looking at the broader market that you're sitting in, especially if you're a community institution with a limited reach or a credit union that has a charter containment, how can you look at the community that you're serving today, identify those profitable relationships, and then find even more of them? And that's, I think, where predictive modeling and data hygiene really comes into play and can move the needle.
And, why is this the right time for community institutions to kind of take a step back, reevaluate how they're marketing, and maybe take this type of different approach using and utilizing their customer information?
I think uncertainty with the Federal Reserve and how they're going to manage rates over the next 18 to 24 months is an indicator that you have to try to work within the things that you can control. And you can control how you build your accounts in an attractive way that can acquire better, more profitable relationships. And you can focus on how you deliver either on the online banking or digital side or in branch, and ultimately how you foster those relationships. I think that the more community-focused institution is going to weather this storm a lot better than what we're going to see out of some of the regionals and the super regionals and the national banks.
Oh, interesting. Okay. And is this what you're hearing from bank leaders? Are community banks and credit unions trying to modernize their approach to customer acquisition, or do you feel like they're still kind of stuck in, the way things used to be done as opposed to taking a more modern approach?
Yeah, I think that anybody who's paid attention to what's going on especially in community banking or in credit unions understands that the COVID pandemic was a major shift in their business model that they were not expecting, even though some of them, the kind of industry leaders, had been preparing for better, smoother digital delivery. This forced all of them to come to terms with it in a very short period of time. So the ones that were stuck, I think a lot of them got unstuck during that period and were kind of forced to go to these digital adoption and platforms. What we're seeing now is that there's still a huge gap in the sort of self-serve part of it and acquiring the customer fully through the digital channel. That, I think, is the next big hurdle for community banks and credit unions to overcome. The bigger ones, the ones that are tech-focused, are doing that now. But there's just not a lot of opportunity or partnerships to help them through that. So I think that's probably the next big moment to get them unstuck. So the digital adoption during COVID was a big move for a lot of legacy institutions, but there's so much more they could be doing.
And speaking of partnerships, I'm going to move the focus over to Diana, because I know Current and DIG have a partnership, and that is utilizing DIG's expertise in terms of data. We've talked a lot about integrating data into what is our T3 product, but let's take a step back. What's the role of data modeling in helping institutions better understand and prioritize their market opportunities?
Again, thanks for having me and letting me participate in this webinar with you guys. And data is can give your little bank a superpower. You don't realize the information that you're setting on. Sometimes it's in different silos and different areas within the bank or the credit union. And when you can bring that together, it really can be your organization's superpower, because you can turn that data into smart decisions, and allowing you to make better marketing decisions, because those dollars really count. And if you can take your data and utilize it in a way that you've not done before, and understand your customers, and be able to predict who may buy, and even more important, who may not, so that you don't spend marketing dollars on them. That's just as important as where you do spend your marketing dollars. So you can really figure out your customers and potential customers, not just by blanket demographics, but utilizing your data about their accounts and their interactions, and which branches they show up to, which ATMs they show up to, what accounts they have with you. It really is a gold mine to really supercharge your marketing opportunities.
Yeah, absolutely.
That's a great point too and it's something I think a lot of people don't think about when you're building a universe to target. The exclusions are more important than the inclusions. And if you're using a smart predictive model that can help you figure out, not necessarily these people are a lost cause, but they're not the right type of holder that your institution wants.
Absolutely. And the three of us have all worked closely with community banking institutions. But when you're brought in, where's the biggest opportunity you typically see in how they're using or not using their data today?
Usually the first biggest opportunity is figuring out what data they even have, because a lot of them don't even realize what they have. And I mentioned earlier, it's very siloed, different departments, different areas, different account types. And so that's usually the biggest opportunity, is actually bringing all their data into one data lake, one database marketing opportunity that you can go through and really see who you have. That way your deposit folks knows that this guy also has a business loan. That's the biggest opportunity, which allows you for better and smarter targeting, integrating those data sources, and consolidating costs. Because if you're trying to do demographic overlay on 4 data sets and 30% of it overlaps, you've wasted some resources and money just doing that. So bringing it all together so that you can be better segmentation and better targeting, that's the biggest opportunity they have, is really just consolidating all their data into one marketing database, and they can evaluate all the accounts, all the engagements, and where to go forward with those folks.
Yeah, I actually, one point I'll bring up that I think is it's something I didn't figure out till I had worked with some of these institutions for about 4 or 5 years. And it was that they oftentimes confuse their core system with a CRM, right? It's not.
Yes.
And a lot of times we'll ask, do you guys have a system where you manage customer and prospect data? And they're like, well, we have our core. And it's like, well, okay, great. But you typically can't hold prospect data there, because they have to have an account number in order to be resident on the core. And it's just not a good representation of the marketing data you need to help make decisions to put people into campaigns.
Yeah, absolutely.
You make a good point, because certainly we can take their customer data and find opportunities to cross-sell and go deeper in terms of householding. But can you talk a little bit about lookalike modeling and why your existing customer data can be such a powerful tool in trying to go out and prospect to new customers?
Yeah. Prospecting, the entry level to me, is the lookalike. You don't want to just go buy a list and go, "Ooh, I hope this works." And that's, the shotgun approach. We're just going to mail, roll, customer route and hope it goes well. But if you can build at least a minimum of lookalike model, so your demographics of your customers are married, kids, and a certain amount of income, or no, they're the singles and this amount of income, no kids, urban, rural, that right there will help take this universe of everyone and cull pull it down to the more likely folks that match your customers, because then if you know your customers, you know how to speak to prospects that are like your customers. And so that's what you're looking for in those. And then you can even fine tune more of like, these are our best customers. Mm-hmm. So those are the ones I want to go after first, because I only have X amount of dollars to spend on marketing. So target in, these are our top 20% customers for us. This is who we are. This is who we serve. This is kind of deposit and relationships we want. Let's go find folks that look like them as closely as possible so we can get more of those customers.
Yeah, that's great. And we call this kind of predictive modeling. And how does that predictive modeling fit into T3 as a program, James? And I'd love to understand that more.
Yeah, absolutely. I think that certainly the selection criteria for a campaign is rooted in that exactly what Diana just said, which is let's look at your existing base. Let's try to understand who they are, not just from the data that your institution has, but also some third-party data that can maybe expose a little bit more about their needs, attitudes, and behaviors, and the types of things that really move them. And then look at those same attributes across a prospect set, within the confines of your branch network, and really build out a population to target based on those. That's the first big step in this whole process. Is like let's look at who's your most profitable customers today. Let's build some modeling around those, and then let's find prospects in market that have both the internal and external attributes that help us understand these are the guys we're most likely to move. These are the households we're most likely to acquire. And then second to that is we've now put them into what we like to think of as smart segments and try to keep it tight. We don't want 30, 50 different segments. We have a very distinct approach that says 4 segments are good, and those are aligned with very specific product offers. So again, back to the exclusion, like we have filtered down the people that best match your profitability metrics, and then further, we think are the most likely to open a checking product or to lead with a certificate or to have a high yield savings product that we know will move them because they're numbers focused and they're very liquid and they're always moving things around. Like there's indications we can get from the data that tell us these people are most appropriate to be approached with this product offer. And then from there, we're not just putting it in the mailbox. There's also a combined digital campaign that kind of provides that air cover on the front end. It's hopefully fulfilled very well by the creative in their mailbox, and then they get it again on the other side of the campaign with a little bit of a digital offering. And we find that those tactics, coupled with this predictive modeling strategy, really move the needle.
Yeah, and it seems like from a budget standpoint, this would be a smarter way to use your marketing dollars than just going out and dropping a direct mail campaign in a geographical area surrounding your branch locations.
Yeah. Yes. And a lot of times I think people see this as as like an alternative to all the other mass media they might be doing in market, a community bank, for instance. And it isn't necessarily meant to, fully replace that. That stuff can provide air cover if you use some of the similar creative elements. Try to use that targeting approach if you're already committed to doing some kind of print advertising in your market. This can support that and certainly provide a more targeted approach. But it is definitely a way more efficient and effective way to attract and acquire new households.
Right. Yeah. So, I think when you talk about predictive modeling and using customer data, it sounds very complex and expensive, like something one of the bigger, banks can afford, but maybe a community bank or a credit union may not understand how to do, or if it's affordable for them. So, Diane, I'm going to put you on the spot here, maybe, but is this, I feel like this is a misconception a lot of times with that it's direct data-driven marketing is only for the big guys.
Right. And it's not about the size. It's about the strategy they put behind it. So, you don't need a huge team or fancy tech to get started. You can, again, consolidate and bring in all your customers in one database and really look at them and who they are and what they're doing. That's data that you have. And then to add a few demographics, then that allows you to, instead of mailing 100,000, you mail 65,000 pieces. So you're being more effective. So with the same spin that you would want, instead of mailing shotgun approach, you really get the targeted approach. And so it's not a big spend because the results will outweigh that spend. And that's something else that you want to look at, again, when you're profiling your profitable customers, knowing their lifetime investment, not just this one account, but what do they look like as your long-term customer, so that you know if you get Joe and Sue to move their checking, you know what Joe and Sue may do for you in the long run and stay your customer for 30 years. So it is so not for the big guys. If anything, it's data targeted marketing is more for the smaller ones, because you've got to be smarter with your dollars and more targeted. You don't have the marketing budget to do this shotgun and let's try everybody in this one neighborhood. We want to try the 5 or 6 houses in that one neighborhood that we know look like our customers.
No, that makes sense. Yeah. And I know we're going to dive into this more in our next webinar where we talk about the digital side of T3. But James, could you just give us a little piece of like, how does that relate on the digital side as opposed to the direct mail side in terms of targeting?
Yeah, I think that over the last, 10 to 15 years, the effective placement and efficiency that you can use digital has it's increased 1,000-fold. Like the tools that Google has, and certainly some of the social platforms where a campaign like this could be leveraged and very appropriate. They have fantastic efficiency and effectiveness. And to just kind of dovetail back to what Diana was just saying, focusing on lifetime value of a household relationship is kind of literally the only way bankers should be looking at their marketing spend. If they can't project the lifetime value of an account acquired, that right there says they have to kind of reevaluate how they think about their households and probably their entire profitability machine. Like you need to be very focused on that lifetime value. And that is an important piece when we talk to them, because sometimes a campaign like this can feel like a heavy investment in the beginning, but the reality is the long-term yield is, exponential. I mean, if you get these accounts to fund and stay on and possibly cross-sell into another account over 3.5 years, whatever the average tenure is right now for a community bank in the checking space, like that, I mean, you can run the numbers, you can see what that looks like, even just using average balance metrics. So adding digital, which is way more cost effective, into that mix makes the whole campaign way more profitable. And the types of targeting you can do with digital, I don't want to give away too much of the
secret sauce
webinars. Well, yeah, and future partners that we might have.
Right.
And their talking points, but really the delivery and the mechanism for digital allows you to pinpoint this audience that you've identified in ways that I don't want to say it's better than direct mail, because direct mail is still my first love. but it definitely supplements that in a way that is, depending on the type of user we're talking about and the type of consumer of advertising, it's less intrusive sometimes and more subliminal. So to me, putting these two pieces together is the big difference into how I've run programs like this before. Like leaning into the digital side of it, which I think a lot of community banks and credit unions struggle with. They don't really understand how to prospect in that space. And this helps close that gap, because you're putting messages in front of people that are more relevant, more timely, and they are more likely to engage with because it matches them where they are in their financial phase.
And I know customers, our account holders, customers, prospects, members, whatever you want to call them in your space. There's a lot of concern these days over security and privacy of customer data. So in a program like T3, how is that protected and how is that customer data used?
Right, the customer data, and that's where DIG comes in. And for anyone that wants to Google it, we're SOC 2 Type 2, which means we're really secure. We go through audits every year. There's testing that we work with external companies that run the audits and give the certification, and everything is locked down and partitioned. I was trying to think of the word partitioned off. So no customer data that we have will ever mingle with other customer data. It's also siloed off by who has access to that. So if you're working on the project, you get access. If you're not working with that client, you don't get access. So that is somewhere where DIG really excels, is with the data manipulation and data housing and data security. We work with all three credit bureaus and house the credit bureau data. So that's to the extreme that we take our data security.
That's great. And I know, when T3 was being created, and by the way, James, you might want to go into really quickly what T3 stands for, why, but it was important to find a data partner that could partner with Current. So because we needed that data manipulated and delivered to the direct mail house and to the digital partner, as opposed to our agency touching it. So that became important. But tell us how all these things integrate together to create T3, James.
Yeah, Lori, we didn't even really start with that, with like an introduction of what the product is.
Well, that's okay, because we're here talking about, macroeconomics also in terms of the financial space. So there's a lot of ground we're covering, but I thought we could, dig in a little bit more on T3 as a product.
Absolutely. T3 is our, what we built T3. It's turnkey, it's tailored, and it's targeted. And it's essentially a program that we have built for community banks and credit unions that helps them leverage a lot of the concepts that we've been talking about, which is to find audiences in their market that can open new household accounts for them, to cross-sell their existing accounts into to kind of broaden the household or increase their share of wallet. And we do that through the use of the data that we've been talking about, where we're both looking at their existing base and then doing a prospect select in their market within a specific parameter around their branches. And we're aligning the selections for those campaigns with very targeted, specific, creative offers. And it's interesting when we have these conversations with bankers. I think in the past, the data part scared them a little bit more than the creative part. And now I feel like it's kind of gone the other way. And a lot of it is because I think they're concerned about, are my products competitive? Mm-hmm. And spoiler alert, no, they're not. Especially if you have the word club account anywhere in your array. That is not. So stop with that. And second to that would be, they don't really understand how to talk about these products to the specific segments that we've identified. But that's why we built this program. It's like to help them understand the specifically tailored creative that carries their existing brand and uses their existing products. It just puts them in front of the right people who are most likely to open those. And then in between there, I mean, obviously, if you have, local bank checking, we have a series of tested and verified taglines and copy blocks that work with that type of checking account. So we already know kind of how to appeal, this is going to sound ridiculous, to the emotional level of a checking account acquisition, because there is one, and how you position that, whether it's a mail piece or a digital ad, how you position that appropriately based on the segment that you're talking to. And T3 combines all of those things in a way that, we hope is smooth and easy to use. That's the whole point of the first T, the turnkey portion of it. we don't want this to be a heavy lift on a small organization. We want them to be able to say, we love the approach. We trust your creative, rock and roll. Here's the data. We deliver the data to you. And then really all we're asking after that is a few brand assets and the ability for someone in the organization to approve or revise creative.
Okay.
It's not a huge lift for them. So the turnkey part is critical, I think, for a lot of community institutions right now. The tailoring is this kind of proven aspects of the creative that we know work with your existing products. It would be great if we could take the time to do a little product enhancement, but it is definitely not required to get results. And then the targeting, which is what we've kind of been focusing most of this conversation on. And a lot of that is rooted in understanding who your most profitable households are today and how you can convert that into a strategy that acquires lookalikes in your market. Ultimately, to destroy your competition.
Well, let's talk a little bit about competition. Certainly, there are some financial institutions that are in markets that don't have a lot of the big regional and national players, and then there are others that have a lot of competition in their market and have to compete with huge marketing dollars and budgets. So, how can T3 work in both of those situations?
Yeah, we've seen it perform in the smaller rural markets because it does a really good job of honing in on the target and putting a message in there that resonates because it's custom to the institution. I say we have tested and we have creative that has worked in other markets. It still has to work in your market. It has to work with your brand.
Okay.
And so putting those pieces together, I think really can make a big difference in a rural community where there's not a lot of competition. It can absolutely set you apart and light up both the mailbox and certainly the advertising side on the digital. In those other markets where there's a whole bunch of competition from guys that you maybe routinely see on the news because they run a bank that is maybe the largest in the world, difficult. We are in a market like that right now where some of the largest banks in the world have infiltrated the market.
Right.
And they're definitely causing a disruption to the community space here, both credit unions and community banks. But if you're focused on what your customers really need, it's easy to differentiate yourself. And they are going to spend 100 times what you are in acquiring customers in their general spend in the market. Like it is, you've seen these budgets before, Lori. We've participated in them. It's ridiculous what they can throw at a new market when they want to spend 18 months, building themselves up.
Right.
So that it's important to be more efficient and create more effective campaigns by leveraging techniques like this that frankly are usually only available to banks that have a data analytics department,
Right.
A full creative department. Like that is just not the case for many of these community institutions. And that's why we feel like this is an important part of the story that we tell and what we offer.
Yeah, that's great. This it sounds like it gives community banks, credit unions, even regional banks up to larger banks the opportunity to compete in areas that they've never had the opportunity or didn't think they could before, with targeted households, with specialized offers specific to what they think is best for that individual household or even down to the person. And I know the digital strategy also includes some geofencing around the household that we're targeting. So it's very specialized, targeted offers, but with direct mail and with digital. So that's great. And I know that certainly there's all kinds of things that are moving at lightning speed, like AI, and everybody's trying to keep up with the changes in the marketplace and how it's going to impact our business. So I know that's been talked about a lot recently, but what role do you see AI and modeling playing in community bank marketing in future? And I'm not even talking 5 years from now, but maybe 6 months from now, a year from now, because that's how fast AI is moving.
Yeah, I think there's, we talked about this a little bit on our last webinar, which you can visit the recording. But the long and short of it was, it's not going away. So you either have to figure out a way to embrace it and understand it. I guess that's the key, like understand it, because it is going to impact your business in one way or another. And the more you understand it, the more you can either get in front of it, and if you're really worried about how it works, protect yourself from it, or you can figure out how to leverage it. I mean, we've seen across all kinds of industries where that's become an issue. At Dig, like, what are you guys? Is there any AI integrations that you guys are working through? Is there any tools that you've uncovered, or is it or are you taking that kind of, protected, distanced approach to try and see how it shakes out that I see some firms?
Well, a little bit of both. I mean, our data manipulation and programming that we have in place to do a lot of that is, it's not AI, it's automated. Someone would call it AI if I wanted to use the buzzwords because it's smart, but it's because of what we built into it, which is the same with your AI agent. If you go use a chat GPT, the more information you feed into it, the smarter its answers are. You can even say, you are a expert in blah, 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 and tell it who it is, and your answers are going to come back even better. So I think in this, where we need to look at it from a marketing standpoint is, if you're having trouble defining your customers, let's feed it a lot of information about who you are, and let's let it help us define our customers, because we can't quite articulate it, because that's not an uncommon thing. Like, I know who they are when I see them. So, well, let's utilize this new technology that can bring all of this together, and it's all data. The more data you feed it about who's coming to your bank and what your marketing looks like and what you're looking for and what your products are, we can build, hey, this is Joe and Sue. These are your target ideal customers. And then we take that and those demographics of your target ideal customer and then go use it in our marketing to be targeted. So to me, it's an enhancement of data that you already own. It can also help us if we get tongue-tied with content.
Yeah.
I'm so sick of using the same word. What's another word? How else do I phrase this, right? Or you have multiple banks, or the big bank comes in and they're using similar phrasing. How can I say this my way? Here's all my community bank information and who I am. What's my voice? Help me articulate my voice. So I think, to me right now, AI can be used very much as an enhancement to the tactics and the strategies and the roles that we're already playing and executing on. It can enhance those things and make it better and smarter. But keep in mind, it's better and smarter because we're feeding all the data.
Right. There's certainly learning that we apply from years and years and years of experience, having worked in the space, and same on the banking side. They're going to contribute in ways that can't be replaced by AI. However,
Exactly. And when you get stuff back from AI, ask it a rebuttal question. Like, you said Joe should be this age, and I'm really seeing this. Are you sure? Qualify it. Yeah. So be a smart AI user. Yeah. It is so powerful, but you also have to be smart in what you feed it and what you ask it.
Yeah, absolutely. And I know that one of the things we talked about in our last webinar, James, and that we talked a lot about AI in the last webinar, was that in all facets, we have adopted the use of AI because we don't want any of our customers or our clients to get left behind.
Right.
And so we were very early adopters of AI as a technology, as a tool, as opposed to a technology that is working against us or trying to replace us. So, from T3 perspective, there's no one place necessarily where we're like, AI is completely, used in this area, but it's certainly going to be used on the creative side, on the customer side, understanding the customer, understanding the language, understanding the tone and the brand, and integrating all those pieces together. Am I correct? Yeah. Okay.
I think the most efficient way to use it certainly in a product like this that is very custom for the institutions, but the process itself is very much standardized, is to use it to provide ideation and clarification in the creative space, like you mentioned, Diana. And then even on the, when you're looking at what attributes should we feed to make the model, target, there's always there's perspectives I hadn't considered. If I ask AI that question, it'll give me some perspectives I hadn't considered. So it's a useful tool, but it's not, this goes back to our creative director when AI came out, and he was hearing that it was going to be, terrible for the creative industry. His first reaction was, well, they still got to tell AI what they want. They can't
exactly.
They still can't articulate what they want or need.
Right.
Back to that, it's like, without that understanding of either your customer or your market, AI is not going to really help you that much.
It's an enhancement if you know how to use it. It's another tool in your toolbox to enhance what we already strategically know we need to go and target.
Yes.
Yeah.
I bring the light to it every time I talk to it, because I know one day it'll take over.
So speaking of AI, the role of AI, the role of DIG, and the role of our marketing organization, it's taken several partners and tools and ideas to come together to collaborate to create T3. Certainly I know a bank could do this themselves, but why should they pick someone like us to implement it on their behalf?
And I can answer that real quick, just being brought in from the partnership standpoint, because this is a current idea, current promotion, partnership here for the data part, is because we're bringing an entire marketing department. Mm-hmm. We're not bringing a singular marketing person that is trying to figure out everything from A to Z. I've worked in the agency business long enough and with banking and other Fortune 50 companies that when you have all these different perspectives to bring it in, it makes your marketing more successful. Mm-hmm. So you can look at it, instead of hiring 5 people, you really get that application of a targeted marketing program by hiring an agency at the cost of 1 person, but you're getting 5. So that to me is the biggest selling point, is we're going to take your marketing dollars that you may have allocated for a salary and make it go further and better because of the partnerships that are involved.
Right.
100%. And I think there's a what I like to call the side effects of T3 that people don't necessarily consider, which is that first 30 to 45 days after signing of discovery and collecting the data. Mm-hmm. At the same time, market analysis. And we do both a deep competitive analysis at the product level, and also what I think is even more important is kind of a comparative analysis, which a lot of banks aren't doing for one reason or another. Look at who is like you, but in a very disparate, faraway market. And what are they innovating on? And how do you leverage that? We try to figure out who's on the same core that you are and is in a market up in Washington State and you're in Kentucky. Let's try to figure out if they're doing something innovative at the product and the core level that you could maybe very easily replicate and drive profit with. So that's, I think, and that process is on, and even after the campaigns drop, we encourage them, use the list, especially prospects, schedule a calling night, get all your frontline people together and smile and dial for, 2 hours. And then inform the segments that we've created into your frontline software, so that when somebody at the front line is talking to someone who is, even if they didn't get included in the campaign, we typed them the right way, or they got an offer, remind them, give that sort of 360 reinforcement throughout the organization. And I think that's a piece of it that a lot of people don't expect when they hear about T3 and get focused on the targeting and of course the creative side of it. There's a whole host of strategic stuff that happens around it that's very beneficial.
Yeah. And relying on experienced professionals who have worked with hundreds of banks over the years, in each of our specialized areas. I think that's hard to find and put together even an internal team of folks like that. There's the time savings that's hard to hard to put a number on in terms of the runway to signing and getting up and running. It's very short. Whereas it took us a year to build this program ourselves. Now they experience the advantage of that because they don't have to do that for themselves. So, okay, very good. So let's talk about budgets, time frames, some financial advice that we can give banks and credit union leaders and marketers in this space. What should they be asking themselves right now to prepare themselves for the remainder of 2025 in terms of setting aside budget to, and I think, Diana, you addressed this already, it's basically the cost of what they might get with one employee. Does that sound right to you, James?
Yeah, I think it's if you think about it in that context, like I think our best partnerships have been when there is an empowered marketing leader in the organization.
Okay.
Who only has one or two resources that are very junior, and maybe they're really good at delivering content to the branches, and then doing social media, probably something like that, or email marketing. And in between, there's a whole host of things that they should be doing, but they just don't have the staff.
Right.
And this can be a great supplement for those 3 to 4 people that would really fill out a marketing staff that you would want to see in place at an institution like that. So I think that's a good way to think of it. Like, for the cost of basically a, kind of senior level marketing person,
right?
You get the depth and strength of strategists, data modelers, creative team, people that can execute, and not only all that, but can report back and measure efficacy on the back end and say, like, here's how it worked. Here's the deposits we drove. Here's the accounts that were opened. And, even clients that are with us longer get a vintage analysis after 18 months. Like, let's go back, look at the first campaign, figure out how much those grew. Because they typically contribute more and open more accounts once they're inside. So,
right. So, I know we're coming up close on the time, but a couple things I wanted to make sure we touch on. First of all, if a bank is interested in learning more, how can they get in touch with us? How can they get started?
Best bet would be to go to getuscurrent.com/T3. I think that's probably the easiest way to find us and reach out. If we're also on LinkedIn, which I think we share in all these posts, find us there. But yeah, that's probably the best way to find any one of us, whoever you're most comfortable talking to.
Okay, sounds good. Well, I am going to wrap it up here, but I wanted to, in closing, say thank you again so much for joining us, Diana, especially for taking time out of your day. We really appreciate it. And thank you for the insightful conversation from you both. We will be providing a recording of the session to both our attendees and publishing it, I believe, to our YouTube channel. So if you'd like further information on the T3 program, please visit us at getuscurrent.com/T and the number 3. You can find all of us on LinkedIn, and you can see the full breadth of services offered by Data Intelligence Group at wedigdata.com. Thank you both for joining us today. Thank you to all of our attendees. And until next time.
Thank you.
Thanks so much.
Yeah,